Hi guys, good evening. It's good. I'm seeing some regular names here. That's fantastic. All right, excellent guys. Good evening, Melville. Good evening. All right, guys, let's get this started. So look, a very good morning or good evening from wherever you're joining us from. Today, or it's evening here for me in the UK now. So look, a big thank you for taking the time out of your day or evening or afternoon. It's great to be back with you guys again. And oops, just give me a second. Look, as quite a few traders have requested a webinar on the Quasimodo formation, I thought it just would be a good idea to really to have a session that's focused primarily on the Quasimodo formation. It's just, as you can see on the title, it's a different way of looking at support and resistance. So we have our traditional support and resistance, the ceilings and floors, you know, the supports and the resistances. And yeah, so hopefully this will be interesting for some of the guys that are interested, or girls that are interested in support and resistance. So look, by way of an introduction, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. Yes, so I've been involved in the financial markets for more than 12 years now. I remain very passionate about what I do, and in particular price action. So look, hopefully this will be of use to you this evening. I see the chat box is empty, so I assume I am coming across loud and clear, and the welcome slide is visible. Guys, any questions, any comments, any suggestions, please do forward them through to the chat box. And look, I'll try and address any questions you have. So look, as usual, a recording will be available through the usual routes, guys. FP Markets on the FP Markets website, or through the FP Markets YouTube channel. The links will be in the chat box as I speak. And yeah, please do go ahead and look at and try and view. So what it is I am getting quite a number of emails asking for the recordings. So look, guys, the recordings are available, always available. They are uploaded an hour or so after the webinar concludes. So please do go ahead and look at those usual routes, through the usual routes, sorry. So look, and also FP Markets will send out an email following the conclusion of this webinar, and how to view the recordings. All right, guys, quick disclaimer, as usual, trade responsibly. As you can see here, derivative products are highly leveraged and carry a high level of risk, and are not suitable for all investors. Features of our products, including fees and charges, are outlined in the relevant legal documents available on our website. All right, guys, quick look at the agenda for this evening. So what is a Quasimodo pattern here? I will address what a Quasimodo pattern is, and look, if it's okay with you guys, I will refer to the Quasimodo pattern now as QM. It just saves me repeating the word Quasimodo, just for ease. So here I will go into the specifics regarding the QM pattern. But I will leave you with a clear picture of the pattern structure, and talk about why I believe it's called a QM. However, there's also a couple of labels that have stuck with the pattern, and I'll also highlight those as well. Many will find similarities with the QM and the head and shoulders pattern. However, there are some differences which I will also address shortly. So how to correctly apply the Quasimodo pattern. Okay, at this point, I'll demonstrate a simple to use approach on to correctly apply the QM formation to the charts. This, for me anyway, works well with both the bar charts and the candlestick charts. though I feel it could also work with other chart types too. However, for this presentation, we'll be working with the candlestick charts. Right, using the Quasimodo pattern in trading. Look, as the title implies, I will show you how to use this in trading. This is a basic introduction, guys. There will be a part 2 next week, so we won't go too in depth with this structure tonight. So yes, really what I'll do at this point is I'll bring together the QM and some of the ways we can trade it, including entries and exits. And finally, we have the Q&A. So as usual, the floor will be open to any questions at that point. Newer traders are encouraged to step forward at this point. Please do appreciate there are no silly questions. There really isn't any type of silly question in trading, because it's such a difficult, I believe it's such a difficult thing to learn. There's so many components to successful trading, so feel free to ask any question that's on your mind. Okay, so next slide. All right, here we go. What is a Quasimodo pattern? So, okay, on the first slide, we have the QM pattern in all its artistic beauty. Right, let me get the pen up. That will make it easier for us. Here we go. There's the pen. So as you can see, we have the bullish, so we have the bearish and bullish Quasimodo patterns. As you can see, it's a 5-leg pattern structure. Okay, the bearish is obviously for selling opportunities. The bullish is obviously for bullish opportunities. Now, the QM is not one of the most popular patterns among the technical community, but as far as I've seen and the number of backtests I've done on the pattern, it is one of the most reliable, certainly one of the most reliable and powerful patterns to trade if you're looking at trading support and resistance in a different way. Some years ago, I actually backtested the QM with no other technical tools and found that it gave between a 55 to 65% win-loss ratio, which is fantastic, with an average reward to risk ratio of between 1.5R to 2R, which, again, guys, do the math. It's a fantastic way to trade. So now, of course, this will be different for all traders, right? So we all approach the market differently. We all look at different profit objectives and things like that. So this will be something you'll have to take into consideration when I say things like the stats that I've found. So let me just start by introducing the QM pattern. As I said, I believe I've said this is a reversal structure, okay? This is a configuration that forecasts points on the chart in which a currency pair, assuming we're talking about FX, could reverse direction. Okay, so think of I'm trying to think of a candlestick pattern. Think of the hammer or shooting star candlestick pattern. These are reversal signals. Exactly the same here, guys, but instead we're looking at support and resistance. Although its formation looks somewhat complex, it really isn't. And hopefully by the end of this webinar, you'll see it's a relatively straightforward approach to applying support and resistance. So look, why is it called the Quasimodo pattern? It's a bit of an odd name, I do agree. But look, where did the name come from? So just to be clear, the QM has attracted other labels over the years, including the over and under pattern, which I'm sure you can see why, or simply the fake out. So look, I prefer the fake out because this is essentially what it is. It's a fake out, nothing more, nothing less. So why Quasimodo? I believe it draws its name from this rather handsome young fellow here, who goes by the name of, Quasimodo. And he's the main character in the novel, The Hunchback of Notre Dame. Most children did grow up, most Western children did grow up watching this. I remember it as a child as well. So yes, that's where I believe the majority of people, and the reason is because you can see some similarities, right? Especially with the bearish QM pattern and the poor chap's rather deformed shoulder and head and shoulders. Sorry, I already said shoulders, but the deformed shoulder and head. Okay, so it kind of mimics the bearish Quasimodo pattern. I believe that's where it comes from. But look, although I will refer to this as a QM pattern, I always tend to think of these as fake outs, but they're fake outs. They're powerful fake outs that provide really, really strong ways of projecting support and resistance. I cannot emphasize this enough. Now, I think that's enough for this part, really. There's not really, if there are any questions, guys, please do step forward at this point once I'm about to complete this slide. So if there are any questions, I will address this on the slide. But look, ultimately, we have a bearish. I should have really gone over that. Just bear with me. Let me go over this now, and then we'll go over a bit of the psychology of it. So as I said, we have 1, 2, 3, 4, 5 legs to this pattern. The same for the bullish, and it's the same for the bearish. Okay, so we begin with a bearish Quasimodo pattern. Now, assume we're in an uptrend. Okay, this is the textbook. I say textbook, but I say this is the most widely followed approach. So assume we're in an uptrend. We have a higher high, higher low, higher high, higher low, etc. Higher high, higher low. So leg 1 is the move into the pattern. Leg 2 is the reversal, which gives you a higher low. Leg 3 is the higher high. Now, at point 3, we do not really know what's going to happen, right? We do not know. At this point, it looks like the trend is continuing. And this pullback on leg 4 looks like what? It looks like we are going to form another higher low and a subsequent higher high. But in this case, it doesn't happen. What happens is we form you guys should know this, a lower low, because we've broken this higher low at that point there. Okay, so once we formed this lower low, now we have a potential Quasimodo, bearish, excuse me, bearish Quasimodo pattern in sight. Now we turn higher, so we pull back. This is the pullback, and this is leg 5. We pull back and we look for this left shoulder. So the left shoulder is the point between 1 and 2. Okay. So we extend that point, as you can see with the red line, we extend that through all of this. I call this mess because it is a mess. It's a fake out. It's trapped so many traders, it's confused so many traders. Can you imagine how many breakout buyers were trapped here? Breakout buy above the higher high at this point. Fantastic. We're in an uptrend. We're certainly going higher. It doesn't always work like that, guys. So we bought the breakout. And what also happens is you'll get sellers that come in at this point attempting to sell that higher high, right? Sell from here. So you'll have buy stops above here. All right. What happens is all of those buyers get are trapped at this point. So not only are the traders attempting to sell this point trapped as well because their stops being taken out, we also have breakout buyers trapped. Hence the name bull trap. Okay, we have bulls and we have bears. We have a bull trap here. We have a bear trap here. It's exactly the same, guys. It's just flipped on its head for the bullish Quasimodo. Okay, so we've extended the left shoulder, the horizontal line past all of this. And now we look for the pullback in leg 5 to test this area. Now, once we test this area, this is when we have a potential trade, guys. This is where we have a potential trade. Exactly the same with the bullish Quasimodo pattern. We have a potential bearish trade here. Now, I'm sure you can already see there are some similarities with the bearish QM and the head and shoulders, right? I'm sure you can see that, but I'll explain why they are different shortly. All right, guys, that's the basic mechanics of the pattern. I hope that was clear. Again, 5 legs to the pattern. Legs 1, legs 2, legs 3 are a normal function of an uptrend. Higher highs, higher lows. It's when leg 4 occurs, we have a lower low, we have a potential trend reversal, right? Typical trend studies, if we have a lower low form within an uptrend, it's a possible warning sign that the trend is likely to potentially reverse. And then we look for a sell signal at this point here. Am I saying we can just short these areas here? No, Not for me, not at all. So what I look for a number of things, which I won't go into too much detail right now. I'll save that for next week. But ultimately, I look for stops to take on the approach. So I look for resistance to form here. So I look for, in leg 5, I look for maybe a double top to form here. Trap all of those sellers that sold the neckline, and then I look to take those out and sell into all of that. So I look for the approach is very, very important to me. All right, so I hope that was clear, guys. As I said, any questions, please do fire away. I see a very, very quiet chat box right now. So if there are any questions, do let me know. So let me just clear that and we'll move on. All right, application. So this is where I'll go. I'm basically going to repeat what I ask. How do we trust? Okay, we have a question here. I'm going to answer this live as well, because how do we trust trading education from a broker? Well, first off, sorry, I can't pronounce your name. First off, I'm not a broker. I'm an analyst. All right, I don't mean to be rude. First off, I'm not the broker. I'm the analyst for the broker. So you're trusting my analysis, and my analysis has been for, you know, I've been involved in the markets, as I said, from more than 12 years. There's a lot of traders out there that claim that they're fantastic traders. And I think you know by now, I think many of us do know now that that's not entirely true. This is a very difficult industry to be successful in. So why you should trust the trading education from a broker? I would not trust the trading education from anyone. I mean, you have to make your own. Decisions, of course. So you have to. It's a very difficult one. I do understand why you're saying that, why you're asking that, but it's up to you to decide. You can judge by the quality of what I'm showing here today. So again, this is from me. This is nothing to do with FP markets as such. This is all my analysis. So yes, if you have any questions regarding my analysis, I'll answer them all live. There's nothing. I'm not hiding anything here. So yes, I hope that's answered your question. Okay, so let's move on. Right, where are we? So, okay. So how do we apply the Quasimodo pattern to the charts? And importantly, what is the psychology behind its development? Now, look, if you go on any forum, the Quasimodo pattern is shown on a lot of by a lot of people, but it's not as popular as some of the like the head and shoulders pattern and things like that. So take this, you know, take what you can from here tonight, this evening, and go and apply it on your own charts and see what you think. That's all I'm asking. And then next week, when we meet up again, we can talk about it. But I will guarantee you'll have some, you'll see some fantastic things out of this. So how do we apply this? As I said, the psychology behind the pattern. So to demonstrate, I'll focus on the Quasimodo pattern. All right, so I'll focus on the Quasimodo. You can remember this from the previous chart, I hope. Whoops, I can't move my slide. Whoopsie, there we go. So we're focusing on the bearish Quasimodo pattern here. Let me just go forward. There we go. Let me get the pen back up. Okay, so right. So as I said, the bearish Quasimodo pattern. Let me just write that there. Oh, let me just say BQM. That will suffice, I believe. Sorry about my writing. BQM. Okay. So to begin with, to have a valid bearish Quasimodo pattern. Now, for me personally, I do have other formations linked to the Quasimodo pattern, which I only use 4 legs. Now, as you can see here, as we said at the beginning, we have 5 legs, right? Now, I also use one that requires only 4 legs. So this will be brought up more in part 2, as it's more of a complex pattern. And it's not really more of a complex pattern. It's just something else to be aware of, something I've seen over the years that I thought was fantastically useful. So to begin with, a valid bearish pattern, we require some form of uptrend. As you can see here, guys, higher high, higher low, subsequent higher highs, higher lows, and then we reach to, again, sorry, guys, we'll point the leg 1, okay? So movement within an uptrend, guys, I'm asking you questions here. If you want to answer in the chat box, please do go ahead. Movement within an uptrend will attract the likes of breakout buyers at this point here. So they're buying the breakout at this point after breaking the higher high at this point here. Trend traders, of course, trend traders will be looking to buy what? They'll be looking to buy the dips, right? After a reversal forms, they'll be looking at, say, the 61.8%, the 38.2% Fibonacci ratios, and they'll be looking to buy the dips. Okay, so and also contrarian traders. As I said, contrarian traders will try to short the points here. So they'll see a higher form. They'll think maybe this is the next resistance. They'll try to sell here. So these are all active within the trend, right? So this is something to bear in mind when you're looking at the overall chart structure. So I won't go into too much detail regarding anything else, but just be aware that we do have 5 legs again. I am repeating myself, I know. So I'm just wondering how detailed I should go in here that I've not really already touched. Let me just repeat what I've already said then. So we have leg 1 at this point. Again, guys, we are still involved within the uptrend. Leg 2 is simply the same as these legs here, guys, nothing different. So at leg 2, we do not know what's going to happen. We form a dip, we hold at support, then we form a subsequent higher high. All right, so at this point, again, what do we know? We know that breakout buyers have come in here. We know that stops have been taken from those attempting to short from here. We also know dip buyers are in the market at this point here. So there'll be buys coming in. All right, so we know there'll be stops below where? We know there'll be stops below this lower low, sell stops. Okay, these are protective sell stop orders. We'll also know below here, we know that there'll be interested breakout sellers below this point here. So these are all things you need to understand. It's not just simply drawing these lines on. You need to understand what's actually happening on the chart. All right, at this point, as I said, we have a higher high that's followed up by a dip. Now, this is your point 4, okay? Reversal. Right, with that being said, what do we expect? We expect, as we saw at this point, and at this point, we expect another dip to materialize and a continuation in the trend. So we don't get that, do we? So what we get is this. We get a move to the downside, which takes out the higher low. Again, guys, as I said, there will be sell stops below here. Sell stops in the form of what? Sell stops in the form of breakout buyers. So breakout buyers, what do they use? They use sell stops. So they place sell stops below here in anticipation of a breakout to the downside. Alongside this, you'll also have the sell stops from what? From those dip buyers here. Maybe they're the reduced risk to break even. So they have their break even stops there and they'll still be sell orders. So more selling momentum. You'll also have sellers that buyers that bought the dip here that would have left their stop at this point here. So maybe think about long-term traders and things like that. So this is all something to be aware of. The pullback at this point, the pullback. I'm just trying to think of ways I can explain the pullback at point 5. So price then really forms a pullback as larger traders. What happens is larger traders come in at this point here. Larger traders, I mean the traders with the big pockets, they know where the stops are. They can see where the stops are. It's obvious on this chart, right? There are breakout sellers below here. There are also traders trapped. There are traders trapped from buying at this point. So there are a number of buy orders here. What you do is you get the larger players buying in here. And then what happens is they'll buy the price up to this point and then sell heavily from this point here. Why would they do that? Because look at this. We already have another fake out at this point here. So we have a fake out. Sometimes these fake outs can be so sharp. They can be quick moves. Okay. And what you'll have is unfilled sell orders at these points here. So at this point here, where traders attempted to get in on the breakout above, on the fake out above, but they missed it. So unfilled sell orders, what they were expecting was price to do this and retest the area, but it didn't. It carried on. So what happens is on the pullback, they know that these orders will be filled. And but look, as I said, on the pullback at 0.5, I look for something to be broken. I need stops to be taken above here. What happens then? Once we break out above this this area of resistance here, just say in 0.5 on leg 5, we form a area of resistance. Think of just simply just as a ceiling, right? So we have a ceiling formed, and what's above that ceiling? Guys, you're free to answer. I'll check the answers at the end. It's fine. What happens is, above this ceiling, you'll have what? You'll have buy stops from those attempting to sell this market. I hope that's clear, guys. You'll have sellers coming in here, and they'll place their stops just above the resistance, and there'll be buy stops. What happens is the price action then takes out all of those buy stops. What do those buy orders represent? They represent orders to be sold into. So it provides the larger players more liquidity from this point here, so they can sell. So they can sell back all of those. So they're long at this point. They want to sell out of that position, right? So they sell out of that position into all of those buy orders, but they create all of this not mess. It's well orchestrated resistance. All right. And then they sell into that, and then no one else is left in the market. All the bids are taken up, and price drops, and they make a lot of money. So you need to think of the psychology behind this. You can also look for additional confirmation at this point. Look for a candlestick signal. Look for something else. Look for a double top to form. Maybe even drill down to the lower time frames. Look for a double top, as I said, on the lower time frames. Maybe even a harmonic pattern. Look for, say, a bat or a Gartley pattern if you're interested in the harmonic trading side of things. All right, so I see we got some questions. All right, thank you, guys. I'm just going to call you T. I'm sorry, I cannot pronounce your name. Look, I totally get why you ask about trusting trading education. I totally understand that. But then why would you trust any education from anyone, right? You see so many people on YouTube right now claiming to be great traders. We've not claimed anything here. You're just essentially listening to someone that's been in the market a long time, and hopefully you can take some knowledge from that. I'm not trying to sell you anything. There's nothing here. We won't go into any sales pitches or anything like that. I'm simply the analyst attempting to deliver some of my experience that I've had in the markets for so many years now. All right, so T, you asked another question. So you look to sell after buy stops have been taken out. I could not have said it any better. So you look to sell after buy stops have been taken out. Yes, you do, because why? You're looking at the buy stops above this resistance, right? So you're looking to sell into all of those. All right, we don't need liquidity. I get that. We're most of us here, I'm pretty sure most of us here do not have the account sizes to worry about liquidity issues. But there are some traders out there that do trade large, have large accounts, and so you have to think about these things, especially in a liquid stock. So think of small cap stocks. There you'll really see this play out. Okay, so small cap stocks and things like that are certainly something to watch out for. I hope that answered your question there. Right, so moving on, guys. Oh, I've still got the drawings on. I apologize for that. Let me just clear those. All right, here we go. Right, difference between head and shoulders top and a bearish Quasimodo pattern. I did say that I will go over that because there is a difference. I hope you can see it already on the chart. So, right, so as I said, there is a clear difference, right? As shown on the slide, a valid head and shoulders top pattern. This is a well-known pattern, guys. I'm sure we all agree. Very well-known, highly traded as well. But many traders do trade this incorrectly, and they get aggressive at this point without waiting for a close below the neckline. Anyway, so we have a left shoulder, we have a head, we have a right shoulder. So head, hand, shoulders. It's nothing complex really, guys. But this is said to be one of the most complex chart patterns. But really, once you understand the dynamics behind this, also in terms of volume, for anyone that trades volume, the volume is said to be the more increased on the left shoulder and tends to diminish as we proceed through its formation. Following the breakout, it is always nice to see a volume increase, of course. So this is the head and shoulders top, left shoulder, head, right shoulder. We have a neckline that's drawn between the troughs Okay, these are the low points that that join between the head. Okay, so low point, head. All right. Once the neckline is drawn and extended to the right, and we get a breakout to the downside, we then have a sell signal according to the head and shoulders top pattern. I hope that's clear, guys. Let me just check. All right. Sorry, guys. Right. So, David, I'm going to read your question out so everyone can see it. I'm not sure if it can be seen by the other attendees. So, hi, I just entered, but I saw Quasimodo formation. I researched it. I saw a head and shoulders pattern and the reverse of it. So my question is the Quasimodo fashion just a, I hope this answers your question actually, is the Quasimodo formation just a fancy word for the head and shoulders pattern? No, it's not. So I hope by the end of this slide, you'll have your question answered, but I get your point. And this is a very common question I get asked, hence why I included it in this presentation. So the key difference is between the head and shoulders, we have 3 defined peaks. Now you might be thinking, yes, we have 3 defined peaks on the bearish Quasimodo pattern, but no, we don't. We only have the 3 Quasimodo, the peaks once the pattern is in play. All right, so this is your right shoulder, yes? We only have this. This is where you're selling. So you're selling the right shoulder, but on the head and shoulders, you have to wait. If you're following the pattern's rules of engagement, you're waiting for the close below the neckline before you can engage. But with the bearish Quasimodo pattern, you're looking for the right shoulder. You're looking to trade the right shoulder because you know of all the psychology that goes on below behind this. Another difference between the 2 patterns, of course, is the neckline. I hope you guys can see this. I'm going to swap over to a straight line. I hope you can see this already. And let's just extend this line. All right. I'm sure you can see the difference. Guys, please do let me know in the chat box if you feel it's pretty much in front of your face what the difference is. The neckline is a very, very big difference between the 2, right? And we don't even need a neckline with the bearish Quasimodo pattern. This is not needed. But with the head and shoulders top, or the head and shoulders, the inverted head and shoulders, you do require a neckline. So on the head and shoulders, the best position for a head and shoulders top neckline is either horizontal, as you can see here, or ascending. Okay, so that is assuming that we have our trough form here and our subsequent right shoulder. I hope that's clear. The reason why is because traders look to place their stops above either the right shoulder or the head. So we do not want a neckline that goes down slopes in a descending fashion. Because why? We'll be looking at shorting below here and we'll have a stop right above here or even above the head. Now, look at the distance we'll need to cover before we're even 1 times our risk in profit. It'll be almost ridiculous to try and trade that. So hence with the head and shoulders top, we want either an ascending neckline or a horizontal neckline. But with the bearish Quasimodo pattern, what have we got? We've got the most awful, the most grim downside neckline you could possibly ask for. So if you were trading this as your, and at this point, yes, it's exactly the same as a head and shoulders top, right? But why would you want to trade this when you can get in at this point here? This is your point. This is your entry here. All right. So hopefully these are the 2 key differences. Let me just see if I've answered this. David, look, let me know if that answered your question. So it's not just a fancy name. Quasimodo is not really fancy anyway, to be quite honest with you. I prefer the fake out formation. This was, I did say this at the, I did say this at the beginning of the presentation that Quasimodo was really derived from the Hunchback of Notre Dame, I believe. But really all it is a fake out pattern. You can see the fake out at this point here. So although I do refer to these in my analysis as the Quasimodo, because it's more known as the Quasimodo, it's all it is a fake out and a very clear and objective way to define support and resistance. All right, guys. So any questions on this, please do let me know. I'm just going to spin things over to the charts and right. How you mark up QM on live trading. No different to this, Shadrach. No different to this. I'll show you very, very shortly. Let me just share my screen for the charts. And if I can find my charts, they should be here. Just bear with me, guys. All right, here we go. I'm just going to share my screen, make sure I'm sharing the same screen. Right, so you should see the euro dollar on your screen right now. This is trading view, guys, euro dollar. I'm going to go over to Bitcoin because Bitcoin's been very, very quite interesting lately. So let's go on to the daily time frame now. It's a bit of a mess and it does have a few other charts, chart patterns on it. So maybe I should go to the H1 actually, because this is clear. All right, let's actually go to the daily in a clear formation. Right, okay, daily chart, guys, daily chart. If you want to tell me where you would mark up any QM Quasimodo resistances or supports, guys, this is, I have not looked at this chart before we come on, so this is all fresh. Do me a favor, help me out, try and look for any Quasimodo patterns you can see, and just let me know the values, and I'll see if what you're looking at is correct. So for me personally, I am looking at, I really like this level here. Why do I like this level here? Let me just get this in, say, a blue color. Why do I like this level there? What is this? This is a, let me go down to a lower time frame just so it's a bit clearer. Why do I like that Quasimodo pattern there? This is a bullish Quasimodo pattern, guys. We have the leg down, remember? The leg down, leg one, leg two, leg three, the bear trap, the fake out. Leg four, oh, we've continued higher, right? Imagine if this was the test, this would be leg five, the reversal into the structure. As you can see, we did not test this area, but why did we not test this area? This is where entries come in, and this is where I'll go into a bit more detail next week. But look, we have what's known as a kink at this area here. Now, let me zoom in. Now, this may be a bit too advanced for the guys that are new to this, and I apologize for this. I just really want to give you a flavor of what you should be looking for, what you can be looking for on a chart. Okay, left shoulder at this point here. We extend from the left shoulder. Remember that, guys? We extend through all of this mess. Remember, I said sometimes the fake outs will be violent. As you can see here, a violent fake out to the downside. This is a false breakout, guys, nothing more. We have support, the left shoulder, false breakout to the downside, trapped all of those sellers, and then we've strongly continued to the upside. Now, if you look, let me just zoom in a little bit closer. We have a kink. Now, a kink you can call supply and demand, but let's just call it demand for this point. This is really a decision point for me. So we have a high, you can see there, going a high at this candle here, and a low. And this gives us an area of demand. Now, that's very, very common, guys, that price may not test the area. Now, I can assure you, I have not looked at this chart before we entered the webinar. And as you can see, look at this, near to the pip point, because we're on Bitcoin, rally from this area, a fantastic area. Now, look what happened on the approach. Look at all this support at this point here. We have support at this point here. Now, we break through all that support. We've gained trust from this support, right? Traders trust this support, support. Trust is in the market. What happens is when we get back to this area, we slam dunk right through that area. All right, so all the attention. What's that bias called? There's a bias, recency bias, I believe it's called. So we're all focused on this support here. We're all focused on this support at this point here. And then we forget really what's happened in the past. We come down, we slam dunk through all of those stops, and we test this area. Look at that. You cannot ask for a better entry than this. This was not really what I was looking at. So as we've tested, as we have not tested the actual line yet, let's keep that in mind, and let's extend that. So we know at this point here, although we did get a test here of the kink, we got a breakdown over here. Nothing happened, right? We would have had a losing trade. What happens is, though, guys, we can extend this as a potential resistance. So think of this as a QM support turned resistance, exactly the same as you would do with a support term resistance. Nothing fancy, nothing really needed. And look what's there to break. assuming we get above this, you know, Bitcoin is what? It's doing pretty well lately, I guess. Bitcoin's now up at 20, ooh, doing pretty well, 23, 20 something. Okay, excellent. But look at this supply here, supply. All the traders are going to gain trust in this. So if we get back up to this area, we'll probably see a nice little reaction, a whipsaw above this area for a move lower. Now, will this be a move lower that continues the downtrend that we're in right now? Probably not, to be quite honest, because we've made some serious moves, but it will be enough to give us some profits. And that's all we're in the market for, really, aren't we? We're in the market to generate a return that can better our lives and the lives of our loved ones, really. All right, so are there any questions on this chart, guys? Because it's pretty simple stuff. But do let me know. This is really your time to step forward. I do have a Q&A session booked for the end of this, but this is the best time to learn, guys, when I'm marking it up. So there was a question regarding the live chart. How do you mark up in live trading? This is exactly how I'd mark up in live trading, Shadrach. So I hope that helps. Let's carry on, guys. Let's go down to a lower. Oh, there was a question regarding timeframes. Sorry, I didn't miss that. I did see that. So does this work on any timeframes? It does work on any timeframes. Let's go down to the M5. Nice and short time frame. Now, let's try this one. Let's have a look. Okay, so what are we looking at? We're looking at Quasimodo supports, Quasimodo resistances. I'm just going to fire a few on where I think price would react. I do see a question. Right, I see the question there, T. How long do you wait for a high probability trade? Give me a second. I will be with you shortly. I'm just trying to find a good setup we can look at. So here's one here. I'm sure you can see this. High, low, higher, high. Follow through low. Nice resistance there. Look at the resistance formed here. Same thing, guys. We formed resistance. What's going to happen, guys, when we test that area? Let's actually have a look. So what my main idea was here, we have resistance, right? Resistance, trust, lower low. What do we look for? We look for a sell. Sellers come in here and they get whipsawed out of the market and they test this bearish QM. But did we test the QM through the kink at this point here? Let's go down to the 1 minute time frame. Super low time frames right now. Whoops. All right, let's keep that there. And no, we didn't. Look, there's the kink. You see the left shoulder here? This is the same QM. Left shoulder here, lower low. Sorry, higher high, higher low, higher high, lower low. And the kink is up here at this point here. Let me just see. All right, so we have a kink at this point here. So we haven't tested it, right? So we didn't test it. Perfect. This really gives you a fantastic opportunity to short into weakness. This is how I look at the charts, guys. I look for points of weakness within the charts. I look for points of pain on the chart. I know that sounds a bit cruel, but this is what we're looking for. We're looking at points for areas of weakness, and this is weak. These are weak hands coming in here. Weak hands, and they're out of the market. Okay, and then we're in the market for a nice short-term gain. T, to answer your question regarding a high probability trade, this is a high probability trade for me because it's got everything you really need. You have buy stops above here to take out. You have just everything you need, a reasonably well hidden area or a level that you can trade. You can enter short at this point here with your stop above this, the peak of the pattern. And look, what's the, let me see that. I didn't really want to measure this, but let's have a look. All right, so what's this? All right, I'm just trying to work this out. All right, so that's about, say, 113 points, and it gives us 260 points. Now, you would never get the full downside move, but you'll at least get a 1-to-1 move, at least. So you'll be out at break even or with a small profit with this move, depending on how you trade, guys. If you're happy with a 2R move, which means 2 times your risk, you'd have made a nice two times your profit on this trade, and within the space of what, 20-30 minutes, and you'd have been out of the trade, done for the day. So, David, I'm just reading your question now. So, does the Quasimodo formation also happen when trading stocks, bonds, and synthetics? Synthetics, you mean derivatives, right? Other derivatives? For sure it does. Now, as I said, I did say at the beginning, I believe small cap stocks are very, very good for this because of what? They lack the lack of liquidity. So you're looking for areas to trap people with a buy and sell stops. Look, medium cap stocks are good as well. I've never traded this on bonds, so I can't really comment on that. I've traded this on indices. Indices are very good as well. But anything that really moves, that's liquid enough to really stand orders, is a very, very good, it reacts very, very well. This is the cryptocurrencies. I normally look at this, as you can see, on the currency markets. So this is the currency markets. Let me just bring up the euro-dollar weekly time frame. I mean, look, a 4-year-old can tell you that the euro is lower, right? It's obvious what's happening here. Look at this. Quasimodo formation here, left shoulder, high. This is a bullish Quasimodo pattern. So we have a lower low, a high, lower low again. Now at this point, bears are trapped. Do bear in mind, guys, this is a weekly time frame. Bears are trapped. We come higher, we come higher, we come higher, and then we come back. And would you want to trade this at this point? I wouldn't. I really would not want to trade this because of what the sentiment is to the downside. So what you do in this position is you look for a break. What happened here? We had a breakout to the downside and followed up with a retest. I've wrote it here, guys. Quasimodo support turned resistance. Nothing else. This is an ideal trade. Now, I believe we had the same here as well. Look at this. Low, high, lower low, high, high, down to move to the downside, and then we tested the level. I haven't marked this on because I did not want to confuse any readers at this point. But look, the low at this point reacted to the pip. So we had 2 trades here on the weekly time frame, just from the QM formation, just from the QM formation. None of the fancy indicators, the RSIs, the MACDs, volume, open interest. None of this is needed to trade this. So yes, this is certainly something to be watching out for. Let me just see if there are any other charts. Guys, feel free to let me know if you're looking at any charts, any QM patterns, and I'll bring those charts up and we'll have a look together. No, there's nothing really going on. So we are testing right now. We are testing a Quasimodo support turn resistance on the daily time frame of the Aussie dollar. As you can see here, the Aussie dollar's done fantastic today. Look at that, 1.3%. As you can see, right now, this is the reason why I did not really want to get into this today is because this is a different formation. Let me just zoom in so I can explain it. So here we have the, let me remove my cursor. Here we have the low, here we have the high, here we have the lower low, and here we have the subsequent rally. So it's a 4-leg structure. The only difference is this is not formed after a downtrend, right? You remember at the beginning of the presentation, I said it should form after a downtrend or after an uptrend. Here, this is through my own experience, guys. I don't know if any other traders show this or teach this or trade this way. I do not know, but this is the way I've looked at it. And over the years that I've found, it really produces good results. So minus leg 1, we have leg, I believe this is leg 1, but no downtrend. All right. So leg 1, leg 2, leg 3, leg 4. And then once we get back to this point here, we have a reaction, but a very bad reaction. We come up, then we drop lower, and now we're retesting the underside of this level as we speak. Do I expect this level to hold? I don't really like it that much. The reason being is because this is so obvious now. This is so obvious, this resistance. Ideally, you want these levels to break with strength. What I mean by this is you don't want to see a reaction like this. You want to see a slice through the level, as we saw on the, let me just give you an example. On the euro dollar at this point, you see we sliced through this, hardly any reaction. Sliced lower, tested the area. Look at that. You could not get a more perfect entry than this to the pip. Now, if this was in an exchange-based market or a stock market, you'll probably see, what's that pattern? The evening star, I believe. Yeah, the evening star. You'll probably see price gap up here, form a nice evening star to give you additional weight to your trade. So guys, right, let me check the questions. There's no further questions. I think I've provided more than I should have done this evening, but I hope I've really given you something to think about in regards to the QM pattern. It's not simply a apply it on the charts and leave it and expect without thinking about the dynamics behind the charts. So this is hopefully it's really provided you with something to think about, something to go away and possibly test. Something to possibly test, and then come back next week and we can discuss it together. Hopefully you will have some examples, and that would be fantastic. Look, as I look to wrap things up, I know I've thrown a lot at you, as I said, but I sincerely hope at least some of the newer traders here were able to walk away with some knowledge. Okay, so walk away more informed traders. As I see, we have some regular names here, which is fantastic. It means we're doing something right. So, and I welcome all newer faces, and fantastic. I'm really happy today. So as always, if you want to get in contact with the research team, as you can see, the emails are on the screen. You can either contact the support team at fpmarkets.com or alternatively, marketanalyst@fpmarkets.com. This is direct to the research team, and we'll get back to you with any content queries you have. If you want the slides, I'm more than happy to provide you with these slides. I produced this for this presentation. Just send me an email, send the research team an email, and we'll get back to you. Now, the final webinar, as I've said throughout the presentation, is the Quasimodo pattern part 2, and that's on the 26th of July at, again, same time, guys. So do be sure to register for that. Also, do make sure to register for the FP Markets Telegram channel. Again, guys, you will see a link in the chat box. There we go, a link in the chat box, or alternatively, if you're on the main site for FP Markets, you'll see it on the lower left part of the website. You are more than welcome, Blue Trader. Thank you very much. And you, Shadrach, thank you very much for your for thanking me. That's fantastic. I hope it's been of use. Enjoy the rest of your evening, guys, and I'll see you again very soon. Thank you very much.